Blockchain-based cryptocurrencies are one of the greatest technological breakthroughs since the advent of the internet. Cryptocurrencies have changed the game for investors and businesses around the world. Here we discuss the basics of cryptocurrencies and why you should invest in them. Welcome to the investment channel. Support us with your like and subscribe. Enjoy watching. What is cryptocurrency? Simply put, cryptocurrencies are digital assets. Its name derives from the fact that all transactions are highly encrypted, making exchanges extremely secure. It is decentralized in nature, unlike traditional currencies which are managed and controlled by a central authority. Cryptocurrencies are limited in number and sometimes correspond to precious metals such as gold and silver. Cryptocurrencies are created through mining, a very complex process that is solved by powerful computers, usually as a reward for successful cryptocurrency transactions. In other words, cryptocurrency exchanges often lead to the introduction of more cryptocurrencies into the world. Blockchain is used in many cryptocurrencies to manage and record transactions as multiple entities keep the same transaction record, making it a very safe technology for investments. Investors who value blockchain technology and have specific opinions about what aspects of it will be important in the coming years can invest in specific cryptocurrencies that form the basis of those aspects, said Swapnil Pawar, founder of ASCII Advisors. The total cryptocurrency market as of July 2022 is more than $1 trillion. There are over 10,000 cryptocurrencies listed at the time of making video, and the number is definitely growing. Of these, Bitcoin has the largest market share with around $950 billion, followed by Ethereum and Tether. The adoption of cryptocurrencies around the world has increased over the years. For example, when United States online retailer Overstock.com started accepting Bitcoin in 2014, it generated $124,000 in Bitcoin sales on its first day. More interestingly, companies are also recognizing the value of investing in this digital asset. United States-based MicroStrategy purchased over $1 billion in Bitcoin in 2020. Do your own research before buying a coin or token, even if someone said it was a good investment. First, it is important to understand that choosing a good cryptocurrency is not the same as choosing a good stock. Shares generate profits for their shareholders, or at least the ability to do so. Represents ownership of the business you have. Owning a cryptocurrency means owning a digital asset with no intrinsic value. It is simply the supply and demand that drives the price of cryptocurrencies up and down. If demand increases and supply growth is limited, the price will rise. If supply is limited, prices go up and vice versa. So the most important question to answer when evaluating a cryptocurrency is how to increase its supply and what drives the demand for that currency. You can answer these questions by reading the white paper that the crypto team is publishing to spark interest in the project. Review the project roadmap and see if there are opportunities that could lead to increased demand. Find the team responsible for your project and see if they have the skills to bring your vision to life. Find a community of people who have already invested in cryptocurrencies and try to measure their sentiment. It is also important to consider how much money is actually flowing into cryptocurrencies. If the market value is already too high, there may not be much growth potential left. Rising prices hold back demand and increase supply as early adopters try to take money off the table. Once you have found a cryptocurrency that you think would be a good investment, start buying. The first step is to open an account on an exchange of cryptocurrencies. Most stock exchange brokers do not support cryptocurrency trading. Coinbase is one of the most popular and beginner-friendly exchanges in the United States. Other options include Gemini, newer brokers like Robinhood, and crypto-backed Sophie. Make sure the exchange you want to use also supports the cryptocurrency you want to buy. After depositing the fiat currency into your account, you can place an order to buy cryptocurrencies. Exchange orders work the same way as exchange orders. The exchange places sell orders at the same price and matches your buy orders to someone else who is trading. Once the transaction is complete, the exchange stores the cryptocurrency in a custody wallet. Buying cryptocurrency is easy. As a cryptocurrency investor, you need to prepare for volatility. Cryptocurrencies are generally more volatile than traditional asset classes such as stocks. Price swings of 10% or more within hours are very common. Also, ultimately, you need to consider how much portfolio you want to allocate to a particular cryptocurrency and common asset class. Make sure you give yourself a wide range of acceptable adjustments due to the volatility of the cryptocurrency. If your investments fall outside these ranges, you will need to rebalance your portfolio. Investing in cryptocurrencies has several advantages. The value of cryptocurrencies does not appear to correlate with the price of stocks, bonds, or other asset classes. However, cryptocurrencies have been around for around 10 years, so data on this topic is limited. In theory, it makes sense that cryptocurrency prices have nothing to do with traditional asset prices. Cryptocurrencies generate very strong returns thanks to their increasing adoption. Most people agree that the expected return from a good cryptocurrency investment is greater than that of stocks. Unlike stocks, some cryptocurrencies have benefits. For example, Bitcoin can be used to pay for goods and services. Other tokens can provide access to the project or discounts on project services. There are also some major drawbacks for investors. The cryptocurrency industry has limited regulations. This means that you won't get the same protection as when you invest in the highly regulated stock market. For example, if your account is hacked, your investment is completely lost and you have no recourse. If the currency you are investing in turns out to be a scam, you can't do anything. Additionally, more regulation could reduce the demand for some cryptocurrencies, increasing investment risk. Cryptocurrency prices can fluctuate significantly on a daily basis. It can be difficult for some investors to tolerate such large price swings. As a novice cryptocurrency investor, you shouldn't try to find diamonds in the open. You have to get into the more established cryptocurrencies that have built-in networks for backup. This will help you learn more about how cryptocurrency investments work and how they fit into your portfolio. Bitcoin is easy to get started. All cryptocurrency exchanges support Bitcoin trading. It is well established and knows what you get with Bitcoin. It is nothing special, just digital money, but it has the first mover function which is widely adopted. This gives Bitcoin a competitive edge when it becomes truly useful as a medium of exchange. Ether is also a good option for novice investors. Ethereum technology underpins most DeFi projects that use the Ethereum blockchain to implement smart contracts and provide financial services without a central authority. When a user wants to write a smart contract on the blockchain, he has to pay Ether for it. As the adoption of DeFi applications increases, the demand for Ether will increase. The third option for novice investors is Cardano. Cardano offers an alternative to Ethereum designed to be more energy efficient by using a proof-of-stake system to validate blocks on the blockchain. As such, it currently has significantly lower transaction costs than Ethereum. Additionally, Cardano has a strict limit on the total supply of Bitcoin-like tokens. This means that supply may be limited in the future, which could lead to higher prices. Investing in cryptocurrency requires you to research and have enough confidence in your investment to hold it when it definitely turns into a road trip. If you can do this, it will be worth it, as the expected return is higher than most other asset classes. Thank you for watching. Support the channel, subscribe, and don't forget to press like button. Feel free to write in the comments below on what topic you would like to see in new video.